here. Borrowing by U.S. consumers fell by the second biggest level on record last month. Joining us for a look at what that means or may mean for consumer spending and the broader economic recovery is Stephen Gallagher, chief U.S. economist at Societe. Stephen, thanks for joining us.
Thank you for having me.
You know, when you talk to people about the banks and you point out all the positives that they're seeing, more trading revenue, equity issuance, the fees they'll be getting on that, a lot of people will say, hey, you got to look at, though, the deleveraging that's going on, not only on the corporate level, but with the consumer as well. Do we see great evidence of that here?
Oh, you certainly do. You see deleveraging. I think the one caveat you got to mix into that, it's not all bad news. We fear a restriction of credit that's going to force the deleveraging. That's always something we might be worried about in advance. But right now, what we've seen is a dramatic pullback in sales, dramatic pullback, therefore, in lending. And now we're in the deleveraging process. Once you're in the deleveraging process, it's probably good news because you're repairing both bank balance sheets and household balance sheets and really getting ready for the next wind-up or for the next spending spurt. So it's not necessarily bad news that we're in this deleveraging process.
You know, Steve, one of the characteristics of recession is that they have their own dynamic. The recession, the economy gets downward momentum because layoffs lead to less spending, less output. It gets worse. Similarly, in recovery, you build momentum. There are people now out there on Wall Street, economists forecasting some modest growth in the second half, which continues to feed on itself and carries us into potential growth rate, 3% or so next year. What is your view? Where are we in the cycle?
I think we're pretty much into that. What you just described is pretty much our cycle. We do see growth resuming in the third quarter. We're looking for about 1.5% growth in the third quarter. Initially, most of it is just from an inventory cycle as opposed to anything else, so it's not going to feel necessarily so good. And even if there were other factors involved, 1.5% growth is really not enough to bring about a feel-good factor for all of us in the economy. We really got to be back to that potential. I heard you talking about that output gap earlier. You know, you got to be above your potential to start feeling good about the economy, at least in your growth rate. So we're not going to feel good. Maybe it's about 2.5 type percent, which really isn't expected until 2010.
Can we not have, below trend growth and below trend employment, or even still continue to lose jobs and have inflation?
Yeah, you got it. Kathleen said you can have your unique flavor to every turn, and maybe that's it. We're destined. We may have a good quarter or so of very strong growth, but I think we're generally looking for modest growth over the next year or two, and we're also looking for low inflation into that. So I think when you're talking to economists, we tend to be looking just at the next year or so. I heard you mention investors worried a lot more. I don't know if they're worried a lot more. They're putting money into long-term investments up to 10 years. They have to be focused on a longer-term framework. I think if you ask the same economist what their 10-year view might be, it might be a little bit more concerned about the inflation outlook.
Steve, very quick question. Are you concerned about the dollar?
You always have to be concerned about it. I actually am not deeply at this point. I see most central banks doing the same exercises the Federal Reserve is. Bank of England, of course, is. I think the ECB is giving seemingly out of it, but they're not. They're involved in quantitative easing as much as anybody else is. Their economy is actually weaker, I think, going into 2010. So I think that is actually going to be a positive factor into this year, next year, as the economy in the U.S. is recovering first, and it'll support the dollar.
Okay.
All right. Hey, Stephen, we appreciate you joining us. Stephen Gallagher, they're joining us from Societe Generale, or Soc Gen, as it is easier to pronounce, and Kathleen.